Okay, hello and everybody, and welcome to Investing with IBD, sponsored by Vantage Point. Today is January 13th, 2021. I'm your host, Arusha Paris, and today, returning back to the show after a long time, we have Chris Gessel. Chris is the Chief Content Officer of Investors Business Daily and also the star of IBD Live. Thanks for being here, Chris.
I wouldn't say the star, but yeah. I feel like we haven't seen each other since this morning, but
exactly. Today's podcast, we are going to talk about the current markets. We are going to go over a number of aspects, including research routine, because that is so important. And then we will end with a few current ideas. But let's get into the current market. Mm-hmm. We are in a confirmed uptrend. We have 3 distribution days on the NASDAQ, 4 on the S&P 500. Chris, what are your thoughts on this market?
Well, I think there's a lot of really great action and maybe even some climactic action among individual stocks. But what's been kind of cool this week is that the market has been, up and down a little bit, but, there's been days when stocks, especially our stocks, have been just roaring. So those are the best types of markets for me. I love it when the indexes aren't getting extended, but your stocks are acting really well.
And that seems like to be a lot of the times when you're in a good environment, mm-hmm. where it's because it always shocks me because I don't watch. I know a number of people out there, including in-house. Everyone's watching the indexes very closely. Over the years, I just have kind of drifted away from the indexes, and I really focus on the leading stocks. And so sometimes I'm surprised that I've had a good day in the market. Mm-hmm. I'm like, the market was down.
Yeah.
So it does surprise me, but that does bring up a question, because 15 years ago, I was always all about the current market and mm-hmm. really always knowing what the NASDAQ was doing. Has any of that changed for you with just combining market analysis and leading stocks?
I still pay close attention to the market, especially when it gets extended. Okay. And we measure that in a number of ways. Like in normal markets, 6% above the 50-day moving average for the NASDAQ is getting extended, and you got to be on the ready to for a pullback. And the market, since we followed through in April of last year, we can be well above 6%. And I think before the September correction, we were probably almost 11% above the 50 days. So it's a little bit different right now, but and then the other thing, sometimes if you get 4% above the 10-day moving average, that's an area where the market will pull back. So it's stuff like that. When for people on IBD Live, we've been using regression channels, and yep. That's been very, very helpful. And it just looks at the slope of the market, and when it moves far above or below that slope, it can be either a time to pull back or a time to rebound.
Yeah, and that does make a lot of sense, and that regression line does help me too when we go over it every day on IBD Live. Just gives an idea. Last time we got one standard deviation away from the line. That was around September, right? Early exactly. September, and then we had that big sell-off. And so it's not like it's magic, but it starts increasing the probabilities that maybe the market's getting a little overheated.
And then the other thing, I always tease Justin about the complexity of the market school rules. Yeah. But I've kind of, there are 2 things I really pay attention to. Obviously follow-throughs are incredibly important. And then, are we trending above the 21-day moving average? Yes. Are we in a power trend? And that's become very useful. All the other little, turning up and down the exposure rules, I still have trouble wrapping my head around that. But the basic stuff is like, are you in an uptrend? Yeah, okay, let's go out and let's start looking for stocks. And when, after a pullback and the market's reversing, that's the time to get really aggressive and, keep your watch list up to date.
Yeah, that 21-day moving average on the NASDAQ, I'm a believer in now for sure, especially once we came out of the quick bear market in early 2020. Once we got over that moving average, that's when it's like, okay, it's time to get a little bit more serious. And that was also lined up perfectly with the fall day on that point.
Yeah, that was actually challenging for me emotionally because I know, because we've done all this research on what we call vertical violations when the market really breaks hard, and when they in most cases when you have a break like that, you're going to have maybe 2 or 3 failed follow-throughs, and then the market really takes off.
Right.
However, what we've noticed is that when it's a news event that's really driving it, and I say COVID was news in the sense that it wasn't economic. It was affecting the economy, but it wasn't organically economic in the sense like, oh, the economy is slowing down, interest rates are going too high, or companies are lowering profit estimates, those fundamental economic and market factors. And that's when the market really takes more time. So in 2019, in that first correction after we had the big rally off the bottom in December of 2018, I think the trade war was heating up, and so that came down pretty hard, but then it resolved itself, at least for a while, and came right back.
Yeah, and I think that 2019 V-shaped rally that we had kind of made me a little bit more aware that it's possible, because that caught me by surprise, how sharp it was. So I knew that was in the back, and that was possible, and it could happen again. But I was like you, Chris. I still was definitely emotional. I assumed the first fall today was going to fail.
Right.
And a lot of V-shaped kind of rallies usually will resolve with a sell-off to at least somewhat test the bottom.
Right. But the thing was, I felt like I was a little slow getting in, but then I went back and I looked, and I had a fair amount of exposure, but I probably could have been a little more aggressive. But at the time, in hindsight, it's easy,
right?
Just having the knowledge that most of these don't work. However, to your point, most rallies off the bottom don't turn into a power trend right away. And so once you have that strength, that's unusual, and that's telling you that this follow through is working.
Yeah, and so kind of going off that trend, what are your just overall thoughts on 2020? Because there are so many lessons to be learned. It was obviously a pretty extreme environment. Just what are some of the things that you gained from those from 2020, the environment?
Well, that when you're in such a strong market, I mean, these types of markets only come around maybe once every 20 years, where it's just so powerful, and take advantage of it. I mean, press it hard, but have a plan to raise cash, or hedge your exposure, reduce your exposure some way when the market pulls back or falls into an intermediate correction. But it was really amazing how many stocks broke out, and if you missed the breakout, a lot of them, it was very difficult to get into them.
Right.
So really, and I think it comes down to understanding what's happening in the market, and why it's so important that when the market is in a downtrend, don't turn away from it. You got to do your routine, and we'll talk more about that coming up. But that's where you find the next crop of leaders, because they just start. It's almost like they're on a big billboard with flashing lights when you're looking at a stock, and it's building a base, and the RS line is already breaking out to new highs. It's like, okay, that's going to be one I got to watch on. And so, make that watch list, put that on your ready list, and be ready to act when it presents itself.
And and speaking of strategies, because that obviously, that for the relative strength line, that took me many years to really appreciate the power of the relative strength line, especially in a correction, in a bear market. How has your strategy evolved over the years? You've been doing this for 20, 30 years. You've been at, how long have you been at IBD now? Or when did you start? 20 plus years. I was going to
yeah. It's coming up at 25.
Okay, so 25, almost 25 years, which is amazing. Right. And so during that time, how has your strategy evolved? Because obviously the markets have changed slightly, over those times.
Yeah, well, I've learned to really look at the market and see, okay, this is what the market is rewarding right now. So, for example, this year was all about sales growth, and that's something that really only started at the beginning of 2019. We've actually gone and tested this and created two indexes, one more of a sales growth index and one the IBD 50, and they basically mirror each other. And then there's maybe it was 2018 where it started diverging, and so sales growth is now like the primary driver of a lot of big stocks. And so we're adjusting things to take that into account. Mm-hmm. But in the same way, some people will say, but Bill says, they've got to have earnings. It's like, well, because when Bill made Can Slim, earnings were paramount. And right now the market has shifted and earnings are still important. But we've seen many, many stocks have fantastic moves, and the institutional quality moves. I mean, there's a lot of volume in them, and they are not profitable, but they've got this really robust sales growth. Usually, it seems to me the inflection point is 30%. If you're above 30% and maybe like 50 or even higher, that's
30% over like a quarter, a year.
30% year over year. Okay. on a quarterly basis. Okay. But when you start seeing that kind of sales growth, that's where the big winners then all of a sudden emerge from that type of fundamentals. At least this past year, it may change, right? But that's been a big takeaway for me. Is you just we're looking for strength, we're looking for leadership, but sometimes the details of that changes.
Yeah, and I mean that's I think one of the hardest parts, especially for people who are new to this. Mm-hmm. And especially if you learn Can Slim and you're looking for everything. The way I look at it is learn the larger rules, but the most important thing is learn the concepts, right? And then you have to make your own, and you have to be flexible enough so you adapt to any environment when you are in the strong uptrend.
Yeah, and the fact is, and this is why I really like IBD Live, not only doing it but learning from it, because we learn a lot from each other. Absolutely. And when Charles comes on, or just when we're talking stocks and picking up things, and so I've become a lot more aggressive in early buy points, whereas before I always loved pullbacks, but I was like, okay, maybe I might sneak in a little bit. But now I really see how buying early, and you can still buy more on the breakout, but all of a sudden that just puts you in such a much stronger position to sit through the eventual shakeouts after a breakout.
Yeah, it is funny that you mentioned first with IBD Live, just us being on there all the time, or even when we're not on there watching it, mm-hmm. it just gets us exposed to different ways to apply the Can Slim system. And it has helped me a lot, like you, and especially with the pullbacks. I mean, that was always the hardest thing for me to do. And right. I was always amazed with Charles, Charles Harris, how he could do that. But, after seeing enough examples and then slowly trying a little bit here and there, and then trying to change your habits and the way you're wired, it has made a big difference, I think, especially last year.
Yeah, well, I mean, pullbacks, if they're not working, it'll be very clear that it's a failed pullback. Whereas with a breakout, we've seen like AMD and Shopify kind of bounce around for weeks. Yes. Pullbacks don't last for weeks. I mean, it's a couple days, and if it's not working, you're going to know it, and you don't have to sit there. And actually, a lot of times, the amount of the risk between where you're buying and where it's not working, it could be like 4 or 5%, and so that means you don't have to risk a lot of money to get a good position, or if you're really bullish about something, you can risk 1% and have a giant position size, 20% out of the box. Not that I would do that, but it can happen.
Now let's end this segment with just a quick story of just one of your just memories with Bill back when 99 2000 environment, because that was 2000 was kind of, 2020 was kind of similar to a 99, maybe not as extreme. Hopefully we're still a few years away from the 99, because it could get more fun. But tell everyone about one of your kind of memories from Bill at that point.
Well, it was, in the afternoon, and, it was over in his office. We were talking, and we looked at a couple stocks, and he just said, I just can't believe this market. I've never seen anything like it. And internally I said, uh-oh, we are near a top. I mean, if he's been investing, since the late 50s, and this is the first time he's seen this market, wow. Okay. So it definitely got me, ready for a top. And so when we did see, especially on the very top day, when the market shot up and then closed right at the low, and we were, in the big picture, we said, this could be the top. This could be the beginning of a bear market. And not like we had some special, looking glass or anything, but one of the things that was influencing that was that Bill had never seen a market like this, and he was giddy about it. He was having fun. So, no,
that's great. First, it's great to be aware that Bill's acting a little optimistic. Bill's always optimistic, but if he's getting a little giddy, it's like that's unusual for sure. But I think the big thing, even when we were saying this also on IBD Live all the time, 2020 was not a normal year, right? It was an extreme year, and you learn to, appreciate it, but also know that a lot of times when you have years when they're excessive to the upside, there could be some give back to the downside in the near future too.
Yeah, especially when you've had 2 years that were very strong. So 2019, I don't know the exact number, but let's say, I think it was around 35% for the NASDAQ. And then 2020 was what, 43, something like that?
Something like that, yeah.
So, 2 big years in a row, not a lot of big third years. Now, there could be some nice swings in the market, and we could, make a lot of money, but it's going to require vigilance on everyone's part, and know, okay, this is looking too good. And you get that feeling. We had it in I think in early July, and then in late August, where you could not believe how much money you were making, day after day. And it's like, and so again, instead of there's 2 ways to react to that. Like, the market is never going to stop, and I'm just going to pile in as much as I can. Or, okay, this is unusual. I know that the market has to be, ready for a pullback, and be ready for it, and have a plan of what you're going to do when the market breaks.
Perfect. So the market is in an uptrend. Growth stocks continue to hang in there, but remember to lock in some of those gains when you have the chance to. Let's take a quick break, but when we return, we are going to talk about the importance of having a consistent research routine. We'll be back. Want to dominate the stock market in 2021? With the COVID vaccines, the shifting political landscape, and a new year, it's virtually impossible to guess what will happen next. But with Vantage Point, you don't have to. Visit www.freestockcoaching.com and find out how Vantage Point's AI technology can forecast stock market trends up to 3 days in advance with incredible accuracy. Vantage Point's patented technology analyzes huge quantities of global data in seconds. Stop guessing. Check out www.freestockcoaching.com and experience Vantage Point for free. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Chris Gessel is our guest on Investing with IBD, sponsored by Vantage Point. Okay, Chris, let's get into having a consistent research routine. So walk us through a little bit of your routine, and then we can go into a little bit more details.
Well, on the weekends, and could be Saturday morning, Sunday morning, but I'll sit down and I'll run my screens on MarketSmith,
Mm-hmm.
and I'll look for just the best composite stocks with 90 composite, 90 relative strength. And you know what? I don't actually run that many screens. I run maybe 3 screens and looking for the very best stocks, the very best sales leaders, which we talked about, that I want to make sure I'm seeing everything that's got sales growth of 30% or higher, regardless of all the other ratings. And then I'm also looking for companies that came public in like maybe the last 2 years or so. And so maybe their composite rating isn't going to be so high because most IPOs do not have earnings, but they're some of the biggest winners. And so I'll change the date on my, I have another version of that composite screen where I change the composite rating down to 80 and just look for companies that have come public in the last 2 years and then have a relative strength of 90. And with that, I dump them all into what I call a screen bin, something that Mike Webster taught me, because when you're running a lot of screens, you're looking at the same stocks over and over. And so this way you can just run a screen, dump those in, those tickers in another list, do the same thing. I'll go into the growth 250. I'll see what are near breakouts, those that are in 3 weeks tight. I'll check the new ones just to see, okay, what's come onto the list that I haven't seen before, so I don't have to go through all those stocks.
Yeah.
Dump them in there. Maybe I'll sector leaders, IBD 50, things like that. But hopefully I've got less than 200 stocks, and then I just start going through, and if I like something, I'll put it into my list and maybe draw some trend lines on it. The other thing with, this is not supposed to be a MarketSmith promotion, but I mean, this is what I
Feel
use.
free though.
Yeah, I know. I love having the right panel open with the
Yes.
sponsorship. And so you're just going through it and you see immediately, T. Rowe Price is in this, Lord Abbott, Fidelity, Contra. And it's just so simple. It changes your mindset about this stock.
And Chris, why is it so important to have some of those big funds in there? So you're looking at some stocks.
Yeah.
So yeah, you're looking at some stocks. You're hitting the space bar. You're looking at the charts first, and you're seeing they're in strong uptrends.
Right.
They might have a lot of other stuff. All of a sudden, on that right hand side panel, you say, "Wow, there's a T. Rowe Price or a Fidelity Contra fund in there." Why is that important to see one of those kind of big time funds, growth funds in there?
Yeah. Well, one reason is that these funds have a history of being in the big winners, that we go back and say, oh yeah, they were in this stock and that stock, whatever it may be, and that they have not just the fund manager making decisions, but he or she has a team of analysts who are doing the deep dive on the stocks, and so if it passes muster with them, then it's confirming the strength that you're seeing. So it's just it gives you confidence that if T. Rowe and Contra are in a stock, okay, this this looks like the real deal, and so I'll put it into my watch list, and then from the watch list, I will create what we call a ready list. So then because I'll just throw stuff. Let's say I've missed something and it's wildly extended, but I want to keep an eye on it. And so I'll put that in my watch list.
And it might not be ready for 2 months even,
yeah,
right?
Exactly. But then I go through the watch list. And so stuff that could be breaking out in the next week, maybe it's, building a base or it's starting to pull back, I'll put that in the ready list and then maybe go on the daily chart and draw my trend lines where I want to be alerted if it breaks above or just different price levels, and just be ready to act on these, because it gets busy whether we're on IBD Live or we're in meetings.
Yeah.
And it's great to just get the alert on your phone that this stock has broken a downtrend, and you're ready to go, and exactly that you want to buy it, and then it's very easy to act on it.
Yeah. Now, one other thing, and how we started off the segment, you were describing some really, really specific lists or screens, right?
Right.
One screen, you're looking for strong sales. Another, just IPOs. Another, it might have great composite rating. Why are you segmenting it like that instead of having one kind of larger screen that includes all of that stuff?
Well, because a lot of times it's an either or. It's not, I have to have all this stuff, but I want to make sure that, you know, one thing that I've learned, and this is something I picked up from 2020, because we were doing some searching and trying to improve some of our indexes. And so I just said, okay, I just want to look at a composite 90 and RS 90 screen. Those are the two main factors. And I always use dollar volume. I don't like looking at thin stocks. I want institutional stocks. So the minimum is 20 million, but I like it a lot higher. And but mainly there might be some other factors in there, but mainly those are the big factors. And what I found out, since I have this ability with my good friend Prabeen, he's in the background working, I can say, Prabeen, can you go run the screen for me back in April? And I want to see where all the winners on the screen. And it was like almost everything was on that screen. And so I used to be the type where I had all, like, I don't know, 10 screens that I would run each week. And some were all about, different patterns, or I can't even remember because I don't use them anymore, because it was just too much to keep up with. And then I would look at the Growth 250, and that simplified my life quite a bit. But and I still look at it every day. But what I was finding is, this one very basic screen, because it's so easy to get overwhelmed with too many stocks. And if I'm only going to run one screen, that's the one that I want to look at. And it's really, it was really illuminating that it got almost all the winners coming out of the market bottom. And the ones it didn't get were the ones that were IPOs, and so they didn't have high composite ratings, or that they weren't hitting, they were missing on the EPS, and so that was hurting their composite, but they had this phenomenal sales growth. So you just kind of look at the ones that, okay, caught these, missed these, so I'll catch them this way, and this other bucket I'll catch with this other screen. So pretty simple.
Perfect. No, yeah, it just enables you to kind of access a few different areas of the market that there aren't any. One thing I learned, when I was a customer years ago, and this was back when it was called Daily Graphs Online. The first thing when I subscribed to that product, the custom screen wizard, they had these little light bulbs, and what do? You go and click all the light bulbs, and I would have 0 stocks in it. And so, the lesson was, there aren't any perfect stocks.
Exactly.
And so you want to look at different areas of the market to see that strength, and then you screen them out yourself. I've always preferred to screen them out myself instead of having the MarketSmith screener do that for me. So that is an important part. But you mentioned another thing that a lot of people struggle with, just having too many stocks that all look good. So how do you narrow it down from there? And so talk about conviction. How do you develop conviction in these are the top 10 stocks that I'm going to really try to hold on to for maybe a bigger gain, or maybe top 5, but the ones that I think are the true market leaders. Talk about that.
So when I start putting stocks on my ready list, that's when I start looking at the stories behind them and digging a little deeper, reading some earnings transcripts. Another great thing about MarketSmith, you click on that right panel and on news, it's really easy to call up all the IBD stories, see what's going on there. Sometimes I'll do web searches as well. But the point is, I want to I do better with a stock if I have knowledge about what's going on, because you want some conviction. You don't want to get crazy about a stock and just say, well, this is the best thing in the world, and I don't care what it does, and I'm going to hold it forever. There's plenty of things that have blown up, and people, take terrible losses because of that. But and I don't have a lot of time during the week because running IBD and doing all these other things,
Right.
doing podcasts. So on the weekend is the time where I've got, a couple hours to, and it's not like you have to go back and read every earnings transcript from the last 3 years or something like that. Usually I'll check the latest one and just see what's going on, get a feel for what the management is like, what the questions that the analysts are asking, and you quickly understand what's going on with it. And then if you need to read some more, you'll get a better idea of the their competitive edge in the market, and are they really changing something? I mean, that's what you really want to see. Is like, okay, there's something new going on here. They're taking an old industry and they're twisting it, and they could be a real disruptor.
Yeah, that's the name of the game. In the end, for Can Slim, the whole growth strategy is find the next companies that are going to change the world. And yeah, those earnings transcripts can give you a little bit of better idea of how they're doing something so different, and they're really tapping into a new market that is dramatically growing.
So that's where I start doing my fundamental research, and or not my fundamental, just doing a deeper dive on the company. And I would wish I had more time to do it, throughout the week.
Yeah, no, and it makes sense. And I think a lot of people can relate to that, about being so busy during the week that you don't have time to watch the market that much. Now, they might be surprised that you're having that trouble too. But I think what a lot of people don't realize is we are doing other jobs in addition to watching the market. So having that consistent routine on the weekend, coming up with the ideas, developing some of that conviction, really helps you manage all the stocks that might be moving during the weekdays.
Now, the other thing where I do have maybe an edge on other people, if I don't really know about a company and don't have time to research it, I assign a story on it, and then and that's why
not everyone has a whole research team.
But really, that's why Stock of the Day is such a great feature, because it's something that's, it's actionable. Maybe we don't know a lot about it, and we almost think about it as, make this a mini New America. Let us know what's going on. And then an hour later, or maybe 2 hours later, here's a story that, takes a few minutes to read, and you really understand what's going on. So those are not just assigned willy-nilly. Those are something that Ed Carson and I talk about. As soon as IBD shuts down, my phone rings, and Ed and I figure out what the stock of the day is going to be. And usually it's, what influences us is, here's something new and we don't know about it. So
no, that is a great tip, and I've started to pay a lot more attention to stock of the day, knowing that that it is going to give it's an idea that not everyone is aware of, and most likely me too. So let's end this segment, Chris, with something that you like to do, and I've definitely noticed this over the years. You like to get away from the market sometimes, and completely get away from all of technology, all of everything. Right? Talk about that, because that is something I think is really important, and something that, I'm starting to think I probably should do too.
Well, every few weeks, I've got some friends, and we like to go out, whether it's to the mountains or the desert or to Mexico. And like last weekend, we were out in the desert in a place called the Panamint Valley, near Death Valley, but we stay in an old mining cabin, and it's off the grid. If it's just us and the donkeys out there, and so it's just great to be away. No, there's no one's texting you, no calls, no one's trying to get you to come in and do some work over the weekend. And the only bad thing is you can't do your weekend routine, but it's a I really treasure these times to just get out and have some solitude, relax, and decompress from the market.
No, that's perfect. So having a consistent routine is one of the keys to success, and sometimes just getting away from it all can really help you think better when you come back. Coming up next, we are going to talk about a few ideas. Stay tuned. Tired of reading about other people getting rich in the stock market? Today is your day. Vantage Point's artificial intelligence has predicted countless market reversals, helping traders weather any storm up to 3 days in advance. Visit www.freestockcoaching.com and find out how their AI automatically recognizes global market patterns well ahead of the news to help you pick the best trade. Go to www.freestockcoaching.com to join a free live training session today. Don't delay, save your seat now. We are back with Chris Gessel on Investing with IBD, sponsored by Vantage Point. Okay, Chris, let's get into a few ideas here.
Mhm.
And the first one that we're going to talk about is DocuSign. And so what I'm going to do is I'm going to share my screen. I'll pull up MarketSmith. And so if you are driving, if you're working out, if you're listening to this, when you get home, you could always go to investors.com/podcast and take a look at the video version to see what we're talking about when looking at the MarketSmith chart. So here's Docu, and actually, I'll start off on the daily. So what do you like about this stock? And yeah, let's go into it.
Well, that I had a nice prior run up, and it's been consolidating since August.
And a weird kind of consolidation.
Yeah,
right?
I know. Yeah, it doesn't look pretty, but what really caught my eye was within the base, there was this little consolidation. And if you can draw a trend line from 256 to 252, yeah, right in there.
So it's a kind of a descending trend line?
Exactly. And so the other morning, yesterday morning on IBD Live, I had this drawn on my chart because I had been looking at it over the weekend, or actually on Monday, and it popped through this. And so we were talking about it live at the time, and I went ahead and bought it while we were on the air. And
as did I.
Oh, okay, great.
so but I think we should warn everyone that I don't think any stock has ever worked when both Chris and I have.
Yeah. So I like the fact that it's taken some time off. What's interesting too, and this is a very short consolidation, only a few weeks, but look at where the consolidation started under 256 under the well, I mean the latest part of the consolidation.
Oh, okay. Yep.
So, and look at your RS line below that. And so now the RS line is at new highs. So, I mean, I would like it if the RS line was taking out the left side high when the base started, but this is another way that I'll use it. And like, okay, within this smaller consolidation, within the bigger consolidation, is it breaking out to new highs along with the stock? And indeed, it's been doing that. So that looks good. And the other thing, I mean, the numbers are still expected to be very strong. And this is another one of these, it's a profitable company, and it's also got that sales growth that's well over 30%. So all the things that I like. If we go to the weekly chart, maybe the biggest issue is, well, it's already gone up, 200% or something like that from that last breakout. And is it too late? Maybe, but even if it just goes up, 30, 40, 50% out of this, and before it starts pulling back, that would be a good move. And, part of it is it's a stock that I was in. Well, I was in 2019 during that move. And then when I got out of it, when the Corona crash started happening, and then we got back into it when it tried to break out. But you see that big outside day shook me, and I'm probably you out.
Yeah, exactly.
And I was kicking myself the whole way, because I have this rule is like, if you get shaken out on a breakout and then within a week or so it takes out that old high, that's telling you the shakeout is done. And I did not act on that. So when it went to 100 and closed at at 100 2 weeks after the shakeout, I should have been actually
this week right here.
Yeah, that week right there.
Yep,
I should have been there. So maybe this is, I wouldn't say a revenge buy, but I just don't want to be miss another move, because I'm like still angry that I missed the big move coming out of the Corona crash.
Yeah, and especially with how strong the market was last year, and how how quick it recovered, how quick it sold off and recovered.
Mm-hmm.
I think we all have like these kind of regret, kind of getting shaken out and not back in it again, and it makes a lot of sense. The one thing that really sticks out to me, DocuSign, is it had that crazy reversal, right? And
Yeah, I
that
know.
was at early September, and I was in it at that point. And there was such a big gap up, and I was like, "This is not even earnings. This is really strange." It was on the same day that Zoom reported earnings,
Right.
and jumped up, and when it reversed, that really freaked me out. But I think the big thing is, and it never continued lower.
Right.
It has fought this whole time and refused to start a significant downtrend. And so that's what always kind of attracts me to it. It's like, wow, this stock just refuses to go down. It's not really going up, but it is just fighting every opportunity to sell off.
But that's what, yeah, and I think that shows up in the RS line, especially on the weekly, where actually on, it's right at new highs, and it's higher than where it was when that big reversal happened on that week. So
that is interesting.
That is, and I'm a big believer in wanting that RS line to be confirming or leading a breakout. It makes all the difference. There are definitely stocks that will do well with a lagging RS line around a breakout, but the one thing that over the years has really helped my batting average and just given me more confidence is making sure that RS line is confirming or leading. There's, sometimes I'll say, okay, I'm going to buy this one because I just want to do it. And, but overall, it's so important. And we've talked about this a lot on IBD Live, but the way I really came to embrace this was when we would do our level 4 master's classes each year, that weekend in December, right before Christmas. It was a great time.
Yeah, it was.
but it was fun being with everyone. It was just probably the worst.
Not the preparation, though.
Yeah. But when we would do the year in review, and whoever was leading that, I would be sitting there in the audience, and I just mark which of the stocks in the year in review, the big winners, on their first breakout, the RS line was confirming or leading. And I did it for a couple of years, and I went back and looked at them all, and it was like about 95%.
Wow.
And if for those few that didn't confirm or lead at the first breakout, they absolutely did on the second breakout. So anyhow, if you want to focus in on the leaders, that is one of the best ways to do it.
And if you want essentially a daily reminder of their RS line, watch IBD Live every day. Chris is always highlighting it, and it's honestly, Chris, it's been really helpful for me because you kept doing it over and over again. That every time I look at a stock now, I immediately look at the RS line, because you almost trained me just to, hey, what about this? What about that? Look at the RS line. So that's DocuSign. Keep an eye on it. Let's see how it performs over the next couple of months. Earnings are a ways away, so you don't even have to worry about that.
Yeah.
Second stock is STONECO's ticker symbol STNE. I have it on a weekly chart here. And Chris, what do you like about this?
Well, this is, it had a really deep base, and I had a hard time dealing with stocks that were breaking out of those bases from the very bottom of the market.
Yep.
And then they didn't really stop. So it kind of pulled back a couple times, and now this is like the first pullback in months. And so this could turn into a base that would be normal, or maybe it just keeps running higher. The nice thing is right now, it's how far above the 10-week moving average is, and
3.4.
Yeah, 3.4%. So if we were going to be doing this, let's take a look at it on the daily. If we were going to be doing this Charles Harris style, maybe might pull back a little bit more. It probably won't make it all the way to the 50-day. Could, but you could be buying it in there. Where I'm looking at it right now is if you draw a declining tops trend line on this pullback here.
Kind of like
And
that, or
yeah, but actually
even
from the
sharper?
top. Yeah, from the
Okay.
top. And so, right, yeah, right about there. And so I'm looking for it to break out of there. And
Mhm.
it, probably, I mean, this is something we would most likely jump on Swing Trader. And this is a great example of how, let's say it starts off as a swing trading stock, but it actually, instead of running up and then stalling and basing, it really goes higher. So then you can turn it from a swing trading stock to a position stock, and now you've got a good early entry on it, and let it run up and decide, okay, I'm going to hold it until it breaks the 21 day, because that's what's really amazing about this one. In the last run from November, it basically held the 21 day the whole time. I mean, there
Yeah.
was one day where it closed a little bit below it, but other than that, that's a nice move. So I would love to see this one turn around. The weird thing is, it used to have much stronger earnings, and I'm not sure if this,
Yeah.
these numbers are all COVID related, but there's some, again, we go into T. Rowe Price, New Horizons has a position, Fidelity has a position. We know, I think that isn't Warren Buffett into the stock too?
Yeah, I think early on he was
Mm-hmm.
in the stock. Yeah, it's not going to be in here, but
Right.
yeah, so
So
Berkshire will be in there too.
there's a lot of a lot of reasons to like it. It's had a huge run, so but if it doesn't work, you'll know it immediately, and you'll get out with a small loss. You won't have to take a big loss on it.
Excellent. So that's STONECO, ticker symbol STNE. Now the third stock we want to take a look at is Apple, ticker symbol AAPL, and it's slowly setting up here, Chris.
Yeah. Actually, we put this on Swing Trader today because we noticed, one, this was the first day in a while where the Qs outperformed the Nasdaq Composite. So recently, kind
Interesting.
of been flipped, and a lot of the big techs have not been performing well. I mean, Apple is probably the best looking, but if you look at Amazon, Microsoft, they got low RS lines, or at least RS scores. And Adobe is another one. So these
Yeah.
kind of the stalwart big techs have been just taking time off since some since July, others since August. So with Apple, what we liked was, look how it's gotten support right around that same level. Yeah, right around 127,
127. Yep.
3 times in the last week and a half or so. So there's a pretty clear floor that if it breaks below that, you're going to be out. And it popped up above the 21 day again today. So given that it showed this resilience over the past week, and it's retaking that 21 day, plus the fact that big techs are starting to look like maybe uh, they've been sitting out, so maybe there's a rotation into those. We're always dealing with rotations. Like last week, there were a lot of cyclical stocks that the market was rotating into. Not so much this week, but that's why, and again, started as a swing trade. If it works, and you can grab a few percent, that's good. But if it really seems like it's strong and it breaks above the top of that base, then you're in a good position to let it go. Now, the big drawback on a position trade is that RS line, and even for a swing trade too. I like to have the RS lines showing strength. So that's probably the biggest negative with Apple right now.
Yeah. Now, Apple has shown in the past that it can trend pretty nicely when it gets going. It has kind of surprised me that it's taken so long to get going this time. But if it starts to break out, it might be nice. I mean, I always like to buy some Apple when it starts to trend, because it's nice to park some money in a stock that moves a little bit slower, and it reduces your overall portfolio volatility. Okay, so that was Apple. Let's go to another one. This is AirBNB. It just came out. ABNB. It's been trading for a month or so, and it tried to break out of an IPO base.
Yeah, and this is one where before COVID, it had great sales growth, and so that's why, it got on my screen. It's also IPO, and it's building this IPO base. And what's really nice is that today it got the blue dot. So
yeah,
the stock, was went above the pivot earlier in the day and then pulled back a little bit, but still that RS line is so strong that it's in new high ground. So again, that catches my eye, and maybe this is one to try to buy. The problem is, since it's come up off the bottom so quickly, where would you put your stop on this?
I don't know. Maybe the low of today. If I say I bought it at 170 right at the close,
yeah,
probably
right.
the low of today, something like that. But it's pretty hard.
I know. And this is a good example. I should have been watching and looking at this today, but I, had been working since 6 a.m. straight, and I had to get up and take a walk. And it's like, oh yeah, I missed it. But we'll see what happens in the morning, and maybe I'll buy some then. But it's looking promising. I like that.
Yeah, it might need. Yeah, maybe it takes a week off or so. I think it's worth keeping an eye on. I do have some shares of this. I got in yesterday.
Nice.
On it, and the reason why I was willing to take a little bit of a chance on it. It's everyone knows what Airbnb is these days. It's just that I've just over the years I've just learned to really respect big brand names, right? And especially if they define a category. And obviously, when you think of going and grabbing a room at someone's house or an apartment or something like that, when you're going to a city, you think Airbnb, right? A lot of people are starting to look at that instead of going to a hotel.
Sure.
If you're looking for a ride, you think of Uber, right? So all those kind of things, now that all these companies are coming out, I try to get a little bit once they start acting well, because that way it just makes it easier for me to build a bigger position if it really, really sets up.
Right. And when you start using the name of the company as a verb,
yes,
I'm going to Airbnb it, or I'm going to
yes.
Uber over, or let's Zoom. So.
Did you Airbnb the abandoned mine shaft that you stayed
at? Don't really have to. It's kind of first come, first serve.
That's great. So that's Airbnb, ticker symbol ABNB. Let's go one more stock, and this is Bill, BILL. And this one, we talked about this a bunch last year, but it kind of fell off my radar. So it's interesting to see that it's doing well now. What do you like about it?
Well, the first thing I really like about it is look at the sponsorship. I mean, it's
yes.
got six funds from the IBD Mutual Fund Index, so they like it. So now that makes me want to take a second look. And quite honestly, this has not acted well. It's kind of a sloppy stock. It goes up and down. Maybe it's good for swing trading, but it would be difficult as a position trade. Although the latest run, that was probably its best run, where you could have bought it and just sat with it for a couple of weeks. So that's gotten my attention. Maybe the character of it is changing. So again, what I'm looking for, if you draw a declining trend line on the tops coming down there, that looks pretty good. It's and actually, let's go to the weekly now. And it's already touched the 10-week moving average. Right. So, and this is kind of the reason why the 10-week is usually a little bit above the 50-day, but right now it's really big. And Ed Carson has made a really good observation that in the last 10 weeks, 4 of those weeks have been 4-day weeks. So it's a faster moving average right now.
That's interesting.
You got Thanksgiving, Christmas, New Year's, and there was something else. I don't know. Oh, well, there'll be another one.
Well, there's going to be this weekend, right?
Yeah,
MLK.
Exactly. Right. Yeah. That was it. There's our 4th. So we'll still have, So these should be tighter than the 50-day. And it's interesting how it came right down to it and got support and doing what's right. So if it can reverse here, I would, I would probably be taking a look at it. The other thing I like is since, the prior base, there was one red spike down in the volume and the rest have been blue. And even in this pullback, there's no big red on the weekly on the pullback. It's very quiet. And last week was got support. It was down a lot and then reversed, and look at that volume. So those guys to the right are coming in and they're picking it up, I guarantee you.
Yeah, and the thing is that it's flying under everyone's radar. No one's talking about this one, right? And I think that always is a big thing. If I'm not really watching it, it's probably going up through the roof a lot, because those are the ones that fly under the radar, and they're not. The volatility is going to be reduced a lot because a lot of people aren't watching it and trying to trade it. So there are a few stocks that are worth considering and adding to your watch list. So Chris, thanks so much for joining us today.
I love it. Anytime.
So next week, we are going to have Jeffrey Hirsch on the show. Jeffrey is the editor-in-chief of Stock Traders Almanac. So that's it for this week on Investing with IBD. I'm Marusha Pierce, and thanks for listening.
And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.